All right, so today I just want to go over a few things about Iron Condors. I know a few of you guys want to know about Iron Condors. Been getting some questions on Instagram, as well as some from my friends and family and stuff like that. To me, I personally feel like Webull is the best option for Iron Condors, and you'll see here in a second why I think that. They lay out everything perfectly, everything you need to know, how much you could possibly make, how much you could possibly lose. I know Robinhood has a better UI, but in terms of Iron Condors and stuff like that, it's just made a lot easier to navigate on Webull. Personally, it's still my second favorite brokerage, so yeah, there's that. Also, if you want to sign up now until the 31st of March and you do see this video, I will be leaving a link in the description below. You can get 5 free stocks upon signing up and making an account. All right, and without further ado, let's get into it. We can just choose pretty much any stock here. So let's say McDonald's, because McDonald's isn't a stock that moves too big price action wise up and down. Let me just actually log in here really quick. Oh shit. Alright, I'll be right back. Alright, so back to it. Finally got logged in here, and like I said, we're going to be taking a look at McDonald's. Basically because for me, Iron Condors obviously want a stock that doesn't move very often price action wise. So McDonald's usually only moves a few points up, a few points down, usually stays in the same range, and it usually has a good contract or premium price for multiple strikes out, since it is a higher value stock. Anyway, so what we're going to do is bring up again any stock you want, any company you want. I'm going to go to options here. I already have Iron Condor pulled up, but most of the time you're going to have single option pulled up for the option chain. And as you can see, these are just naked calls and puts. But yeah, if you do go over this button here, this is on desktop, by the way. The way to do it on mobile, I might make a video soon about that as well, if you guys would like. But anyway, you go to the top left corner, find single. Usually you'll just see single option or something else if you already have that picked out. Then you go down here to Iron Condor. And this is why Webull makes it so easy for you. So basically it shows you, right now we're on the 25th of March 2022 expiration, but of course you can close this and look at all of them that are available for the next, this looks like 2 years. So basically we're just going to stick for March right now, just to give you an example. But you can also change, this is why it's so easy, you could change the width right up top. So the width is how far each contract and each strike is away from each other. So as you can see, it's a 2.5 width, so you got a 237.5, and then 240, obviously 2.5 width, and then 240 to 242.5, 242.5 to 245. It's all 2.5 width. You go up to 3, and then you got 3s, 237.5. Oh no, went up to 5. So I guess up, down. Okay. So those are, I guess, the variables in which McDonald's trades for. So yeah, it goes up 5, 7.5, 10, etc., etc., etc. For me personally, I'd probably trade on the 5, just because it's safer, and you still would probably get a good premium out of it. Anyway, you click here. It shows you your bid and ask price for each Iron Condor, which is the premium, which is how much money you're going to be making. But the good thing about Webull is also going to show you how much you could lose. So right here you have basically your order entry. So you're going to be buying a, let's see here. No, you do not want to buy. To open iron, this is to buy an Iron Condor. What you want to do is sell an Iron Condor for the credit. which means that you're going to believe the stock is basically going to be staying in the same price range. If you do buy one, it means you believe that it's going to be going outside of that price range. You can make money either way. If you want to be going outside of a certain price range, I'd recommend trading stocks like Moderna or Carvana, things that move pretty frequently and pretty volatile. So as for this, we're going to be selling. So we're going to be selling a 230 call. Okay, wait. So we're going to be buying a 225 put, and then selling a 230 put, and then we're going to be selling a 235 call and buying a 240 call. So basically what you're going to want at the end is basically for McDonald's price to end between 230 and 235. Right now this isn't that great because it's already at 237. So I mean, you could have probably moved up here. If you see up here, probably to something that's already between around 237. So something like, for example, 235, 240. But just for this example, we're going to be looking at this and then the graph. Basically, once you get this up on your screen, after clicking on one of these orders and then going through it, making sure everything's okay, if you're buying or selling, you also get another confirmation of what you're doing here. This actually looks more like an iron butterfly because it's not a... Let's see. That's another thing, you're going to want to change the 10 contracts.
Alright, so I actually stopped making the video last week, so we're on a different week now. It's actually a Sunday, so I'm just going to be showing you guys, picking up where we left off. And we're going to be going back to McDonald's, which was at 237 last time we talked. Now it's at 241. So up here, like I showed you, we have Iron Condor. You want to go to that. This is for April 14th, which is 2 weeks out now, starting this next week. The price is at 241. So on McDonald's, you probably want to play a bit of a bigger spread. Let's see. Trying to think which will be better. Actually take 7.5. 7.5 is going to be more expensive. It's going to be a higher risk since it is a bigger width. But the best to go with in this situation would probably be the 237.5 to the 245, which is right here. We do not want 10, we just want 1 just to see. And then if you go over to the graph, you have just 1 contract. This is what I'm talking about. With just 1 contract, your max profit is 304, your max loss would be 446. It's not even, but it is pretty close. Of course, again, stocks like McDonald's tend to relatively stay the same price. It's not guaranteed. This is not financial advice. But stocks with low volatility often trade within a range. Make sure you're charting. Make sure you're finding those channels in that range that stocks like Verizon and AT&T are trading in, and go based off of that. Pick based off of that, and make sure you're picking your 2 sell options, which are, in my opinion, 2 or 3 prices above or below the price of the stock. And make sure you're always watching at all times, because basically what's going to happen is that is going to eat up these contracts, and each day that they become closer to being worthless, each day you collect the premium, and then you can sell it any day you want to collect that premium. Another thing that I noticed is make sure a stock does not have earnings coming up. I've done it one time, and it was a huge mistake, huge regret. The stock literally had like a 15-point move, and I lost a decent amount of money, and I will never make that mistake again. Make sure a stock does not have earnings while you're holding Iron Condors, because obviously with an Iron Condor, you want the stock price to stay the same. What you can also do here is you could do the opposite of an Iron Condor. You could buy, you could switch it up. You could buy the 2 contracts that are closer to the price of the stock and sell the ones that are farther out. And basically, if McDonald's makes a move bigger up or down, then you'll make money. Then it switches. Your max loss will be 304. Your max profit will be 446. And there are stocks that are super volatile, so you can get an Iron Condor where the price of the stock stays the same. Is a lot more risky, so you'll get the max loss for super small and the max profit super high for an Iron Condor. But then vice versa, if you're playing the opposite of Iron Condor, your max loss is going to be super high, your max profit is going to be super low, because the chances of getting profit are super high, if that makes sense. Anyway, let's see, something else I wanted to tell you. I just want to go over and check on one more. Let's go check for Verizon real quick to give you another example. Verizon is trading at 51.28 currently. Iron Condor width of, I like to do usually 2.5 for this one. Let's look at the 50.5 to 53 on this one, and let's sell this. Sell this is playing the Iron Condor. If you're buying it, then you're playing the opposite of Iron Condor. Let's see. Okay, anyway, let's go take a look at the graph. This is for 10 contracts again. Okay, the price, hold on. This is ridiculous. Hold on. Doesn't change it at all. Okay, that's crazy for me. I just played. Okay, that's this week. Never mind. Hold on 1 second. Over here. Okay, then here we go. Let's do a 50-52. This one's a little riskier because we are seeing Verizon's at 51.28 right now, so just make sure you watch it. Verizon shouldn't make a move to 52 in a single day. You know, as you can see here, it only moved 28 cents in one day, and it usually bounces up and down. It has a green day, has a red day, and it relatively stays the same. So here you have a better risk reward, stuff like that. So if you go down 10 contract or 1 contract, you'll see that you're risking 128 for your max loss for max profit at 72. Basically, what you want to do as well is, especially places like Webull, where it has a better fill than Robinhood, is you want to try to get a higher fill. So I'll show you what happens if you put in like 0.90, for example. So then your max profit goes up to 90, and then max loss goes up to down to 110. Basically, it evens it out. So now if you're going to play 10 contracts off of that, now you can max profit of 900 and max loss of 1100. And again, stocks like Verizon barely move. They don't move that much. It's not a guaranteed profit, but the reason why it's pretty even here is because there's basically a 50-50 chance that it will stay within this price range, because again, Verizon does not move that often and does not move that fast. But it's also far out expiration and with a smaller width. Yeah, and basically you also have a little bit of room past your past where you bought and sold the contracts for a break-even area. So break-even here would actually be close to 49, you know, around $49, $49.10, $49.18. You could see that profits even in $49.12, even though you were selling the 50 and you want it to stay between here for max profits. Anything down under the 50 put still gives you profits. So you do have a little bit more leniency that way as well. Same thing with this direction. Anyway, the point is you want your options to expire worthless, or you just want to sell for profits. Buy the contracts back when you're in profits. Usually if you're buying 10 contracts for something that's 2 weeks out, you might only see $10, $20 a day. You could up to 30 contracts if you like, and you could see, you know, maybe $60 a day, $70 a day, $80 a day. I recommend finding the stocks that don't move, low volatility, and that have the best max profit and least max loss. Yeah, so that basically wraps it up for Iron Condors. Again, remember, this is not financial advice. Again, remember people, take profits when you see them and you feel good about them. Always watch the charts. Always make sure earnings are coming up. Any big news isn't happening for any companies that you're doing this for, because on Iron Condors, you do not want big moves. And again, if you are expecting a big move in a company, just do the opposite. Usually, max profit will be less, because it's it's the least risky play on stocks that are really volatile. Something like DoorDash. You might get if you're playing the opposite of Iron Condor, you might get a max loss of $10 and a max, or you might, excuse me. Yeah, if you're playing Iron Condor on something like DoorDash, you might get a max loss of $10 and a max profit of literally like $500. Just because it's super risky that the contract's going to stay between these prices. But if you play the opposite of Iron Condor, it's going to be vice versa. Max profit's going to be super low, your max loss is going to be super high. So yeah, I think that about wraps it up for Iron Condors. Yeah, if you guys have any questions, leave them in the comments below. Like the video, subscribe. I love making these videos. I'm going to continue making these videos. Follow my Instagram, Blackjack Trading Group, and yeah, hope to see you guys there.